Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's August 13th. This will be our chart lesson for the day. And quick look at our daily chart. You can see that it looks like we have some topping action here. It doesn't mean we're going to top out, but it looks like topping action. We made another new contract high, all-time contract high today. We did back off considerably from the original highs, but we closed higher again today. So it's still an up day, but it does look a little like a topping action. You can see we're getting in way up here to overbought territory again. So we could have a correction coming here. We'll see what tomorrow brings, but wouldn't surprise me if we went higher, but wouldn't be surprised at all if we don't get a correction of some kind here just because we're so overbought at the moment. But anyway, let's flip over to our 2000 tick chart, see what it looks like on that chart. You can see it just kind of an up day, down day, and then it was back up again, and then back down some more. It's not quite 5, so the market hasn't reopened yet, but it is after 4, so it has closed here in my time, Central Standard Time. So anyway, let's flip over to that 2000 tick chart, and we'll take a look at it and go through the trades, and we'll wrap this day up. Okay, here's our chart. You can see that this, don't ignore this. This is for tomorrow. We didn't have any news really today, so this is for tomorrow. But you can see we had a big up. We started off up, and then we took most all that back. Of course, we had this gap on the chart. And notice once we filled that gap, we went higher from there. So that was pretty typical of prices to try to fill that gap, and they did. And they tested it a few times before they went higher again. And then looks like we sold off some right into the close there, so to take a good bit of it back. Otherwise, we would have closed slightly off the highs. But it just we're, like I said, we're in overbought territory, so we do need some consolidation or a little bit of a correction. But let's zoom in here where we can see this a little better, and we'll go through the trades. 7 o'clock came right in here, but you just can't enter in this stuff. We run up. There is a break outside here and a couple of legs up, but we're in an uptrend, so you got to be careful going long. But it comes back here and it gives you what I would say is a triple test across there. It pulled back once, twice, 3 times. And so I like going long there. I marked it green. It's just a first entry, but it does look like a triple test. It is right at the EMA, and it looks like we folded over into a secondary channel there. Somebody else asked me about this. They had this channel on there, and I told them I think it's fine if you trade it or don't trade it. But you notice we do get a close outside here and a couple of swings to a new high, and then it just rolled over and went lower. So I don't know if this is legitimately a secondary channel, but it doesn't mean you can't draw your trend lines and still, as long as you're getting setups off those trend lines, take them. So keep that in mind. But we have this possible triple test. I marked it green. It's not ideal. Again, we're working up. You get 2 legs back to what looks like a secondary trend channel. Pretty low risk because it's only 5 ticks. You can actually enter that with an 8-tick rule. We still get new people in and they read the manual and they're really confused by the 8-tick rule, and we probably need to update the manual. But what I usually do is just make sure you make note of this. Rather than having to go in and redo the manual and redo all that each time, if there's something that's minor that we tweak like that, I usually just put it in the frequently asked questions section of the website. So go read through that sometimes. There's some good stuff there anyway. It's worth reading and refreshing your memory with it regardless. So always check that. And if you're a new manual purchaser, be sure you read through that because we did adjust the 8-tick rule somewhat and we relaxed that. You just about have to today. And people get so worried about risk reward because that's parroted all over everywhere you go trading. That's parroted, and it's parroted for a reason because it's wise because they're all gamblers. None of their strategies work. None of their strategies are consistent, and so to keep from going broke, they have to have a risk reward. Otherwise, any kind of gambling strategy has to have a risk reward. But in our strategy, you can get a very high win rate. And you don't need that risk reward. Where you put your stop is much, much more important than how big the stop is. Trust me on that. If you're reading the chart right, most of the times you're not going to get stopped out. Now, if you can't read the chart properly and you don't know where to enter properly, you're going to have a lot of losses, but you just shouldn't be trading live yet because you're just gambling. Until you can look at that chart and say, I know that for a fact, that looks like a sure thing, and be right most of the time, 9 times out of 10, you don't need to be trading live. So forget about trading live and having risk reward. I'm not going to say risk reward is not important, because it is if you're a gambler. But I can tell you right now, when the volatility gets higher and the market moves faster, this just what we do gets easier, because you're only trying to get 4 ticks, 4 measly ticks. If you can't get prices to move 4 ticks in your needed direction before it moves much more in the other direction, then you're not reading the chart right, and you're not entering properly. You're not entering at the right places in the right time. Simple as that. Otherwise, if you are, you should be winning at a high clip. So keep that in mind. Risk reward is not what it's been made out to be. Yes, it is for gamblers in most strategies, but we're not gamblers, and our strategy wins at a very high clip. And so we're not that worried about risk reward. We're more, where we put our stop is more important. Because if you try to stick within 8 ticks or try to get some kind of risk reward, you're just going to get stopped out more. If you enter right here and your stop goes anywhere but 1 tick below that signal bar, then you risk getting stopped out. And as simple as that. And if you try to go for more ticks, a lot of times you're going to get stopped out. So some people say, well, okay, since I got to go for a 16 tick stop, I'm going to go for 8 ticks or 12 ticks or 18, or try to keep it equal. And all you do is end up losing more, because it's not that hard to get 4 ticks, especially if you're reading the chart properly. And a lot of these trades are designed to get 4 ticks. So just keep that in mind. And don't listen to what's parroted out there over the internet over and over and over, because I promise you, probably 75 or 80% of it's bull hockey. Or if it wasn't, they'd all be making money, but none of them are making money. And they can't figure out why. It's because they're not trading properly. You got to trade properly. And most people don't know how. Most of the stuff you're learning is just all these strategies, patterns. You can't make money with patterns. You can't make money with indicators. You can't make money. There's not a software that can make you money. It doesn't exist. Not where it works consistently. Yeah, you can get them. They'll work a little bit and then they quit. This strategy I've been doing 25 years and it's never changed a bit. Price structure and price action never changes, ever. So if you can learn to do this, you've got a skill that lasts a lifetime. And you can teach it and pass it on to somebody else. So just keep that in mind. But second entry long right there, perfect second entry long right off the key entry point. That is the secondary channel. I like that one. We run up and we just kind of top out up here. It's tempting to want to go short there, but you don't know if this trend line is not going to hold. But once it doesn't, and we start trending lower, if you get a second entry, now you can go short. You do get a second entry short right here, but this is your signal bar and it's an inside bar. So you can't go short there. Then it's just too congested here, and there's no setups here. They're all first entries all the way down except for that little second entry that's just chopping sideways and hitting off the lower trend channel. So don't go short there. But notice it tries to go higher a couple more times and you get a triple test right there. Nice signal bar. I like going short there. And we're chopping sideways again. That's just a first entry. You do get a triple test right here off the top, but its signal bar is no good. And then these are all just first entries. And then finally we rally and get a break. But we'd still expect that we're going to try to retest the lows. We might go higher for a little while or sideways for a little while, but we should try to retest the lows, most likely. And you can see here we got a triple test, and it's also a second entry short. I like going short right there. Then it bounces down here, gives you a triple test. So you can tell we're in a range. We're just playing range rules. And the only reason I made this one green instead of blue is because you got a little bit of stem there. It's not quite in the upper 130. It's close, Uh, so maybe you risk it, maybe you don't. You do get a close outside and a new low all in one bar. So maybe you risk that one. Then it turns down here. You get a lower high that plays right off the highs of the range. Just treat that like a range rule and go short right there. Nice trade. Then you get a chance here to go long with a close outside a new low, but it doesn't trigger on that next bar. And by that time, it just looks way too congested. And you see it does break out, fails like you'd expect, comes back, and then goes higher. It does turn down here with a higher, you get a close outside a new high, but again, it looks congested. Just kind of sit tight, and you don't really, because you're not really looking for prices to go lower. You would expect them to go higher there. So going short right there is not a good move. I don't see any shorts there I like. It does break out the lows again. Tries to go lower once, twice. It only looks like a double test there. Normally I like to see at least 3 tests of that, but you can tell we've turned down off that multiple times, and we do have a trend up with a close outside and a new high. So I think it's worth considering that one. It's a little risky, so I marked it green, but we run down, and of course you get a chance to go long there, but you're better off to wait on the higher low, which comes here, and I just don't think that's a good enough setup. You get another higher low here, but again, not a good enough signal bar, and you end up making a couple of swings up, and it turns down right here. Now, this is one of those where you've got a triple test here. Now, this signal bar doesn't qualify, but because you're kind of playing this as support and resistance, you can really kind of treat this like a range rules. So you're just going short off the resistance. This was support, and now it's been acting as resistance and you got at least 3 tests of it. A few more if you count these tests too. And so you may take this entry, even though this makes a tick higher, you might still enter on this. It's very bearish. If you do, you got to put your safety stop 1 tick above this bar because it makes the swing high. So you can't put it above this one. It would have worked anyway, but you want to put it above this one to be safe. And this turns out to be a nice move. Again, it's not a perfect setup. It's real close to being green again, but you've seen me talk about these occasionally. Be careful with them. It is an inside bar, but it's only because and you see you got another one just like it with a matching high, and it's pretty bearish too. You even could have gone short there if you wanted, but you don't have much room back to the EMA now, and so I think you're better off to go on this one or just sit tight. Runs down, bounces again. You could argue for this one. It is a second entry long. New swing high here, and you get a first entry and a second entry here. But it's right into the EMA. It's only a double bottom. I think you need to wait on the higher low, and it doesn't come to way up here, so it's too late. But notice what happens. You're working up. You get a close outside, move to a new high, and there's a nice bearish bar forms. A break below that is a second entry short. Go short there. Boom, down it goes again. And you bounce. You make a higher low than these last 2. So you can't really go long on that second entry, in my opinion. I think it's too risky. Wait and see if you get a higher low, which you do, and it's not a very good setup. But then you get another 3-bar matching low with a better bar, so you could go long on that one. And boom, off it goes. No higher low after that to enter. And of course, you get a close outside, couple legs up to a new high, and then you get a failed breakout up here. Generally, you almost always want to wait on the lower high, but sometimes you might want to take those. So I marked it green, but I think you need to wait on the lower high. The signal bar is not quite perfect either. But nice move down, and then it bounces again, and we're just working higher here. And there is a first entry, second entry, but I don't like that signal bar. I don't like this one. This one is only like 4 ticks. I would rather enter on that one than actually this one. And just because it's 4 ticks and such low risk, maybe you consider that second entry long, knowing you're probably going to retest this high. But you got to be careful with those. Just keep that in mind. And then in the end, this looks like 2 legs up. So in a bigger picture, that's a second entry short. I like going short there. And that takes us into 230. So there it is. Again, it was a big up move, big down move, and then it was a lot of chopping sideways until we rallied. But before the close, we kind of sold off again there. So anyway, there it is. I don't think you can call this a range day. You know, we traded between the high over the lows of the day and the highs of the day. We stayed within that, but there's a big trend up, then a big trend down, then some choppiness, then another trend up. So I think it's just a kind of a mixed trading day is what I would call this. You could still call this somewhat of a range. And if you drew the range, nothing wrong with that. And you can see here the midline does tend to come into play. We're getting support and resistance from both sides. So you can, like I said, you can still call this a range day. I'd just call it a mixed trading day because we did have a pretty big trend up and then a pretty big trend down and then another decent trend up and then another trend down. So overall, I would call that mixed. And we did have this gap on the chart. We opened up at 830 here and went higher. So that gap just got wider. But notice when we came back where we bounced at, we tested that a few times before we went higher. So that was the target to the downside, was to fill that gap. So always keep an eye on those gaps. I mean, when we were really trending higher up here, it was hard to believe we were going to come back and fill that gap, but it happens more times than you can believe. So just be aware of that every day, and the fact that when it opens from the 8:30 opening, which would be Central Time if you're, I guess it would be 9:30 if you're Eastern, and you'd have to do the time frame for wherever you're at. But from wherever you open to where it closed yesterday, if there's a gap, depending on which direction that gap is, whether it's lower like today or higher like some days, prices are going to try to fill that gap a lot of times. They may not be successful, but they're usually going to try. So just be aware of it. And a lot of times they are going to be successful. So anyway, I've been trying to get in a trade demonstration and show me using these new entry strategies, but I've tried for about 45 minutes the last couple of days, and during that worst 45 minutes, I can't seem to find a trade that I want to risk. So today it was, I think, during this period here, and I didn't have a chance. There was a few trades not soon afterwards, but I didn't have time. Couldn't wait on them. I had other things I had to do. So anyway, I'll get one in here shortly, and we'll demonstrate it. But anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.